I'm with Jeff Mack, the Group CEO of Guardian Holdings. Jeff, welcome again to Jamaica.
Thank you, Owen. It's a pleasure to be with you again. Thank you.
Always good chatting with you. Lots of news.
Lots of news.
Information.
Indeed.
Okay, well, Jeff, let's recap the assets that Guardian Holdings have in Jamaica.
So the total assets that we have in Jamaica now, post our recent acquisition of Globe, total 60 billion Jamaican dollars. So it's quite a significant amount of assets and investment that Guardian now has in Jamaica.
Now, Guardian recently acquired Globe, and I suspect you may yet find other acquisitions in the island at a time when the most optimistic forecasts indicate anemic to no growth at all. Do you see Guardian acquiring more assets in Jamaica against that background?
Yeah. You know, Guardian is a Caribbean company, and we consider the Caribbean our home market. We have our roots in the Caribbean, and of course, as part of that, Jamaica is a very important part. And I think really our key message and our theme is that this acquisition of Globe is a further demonstration of our commitment to Jamaica. And with this investment, we bought Globe for $38 million US, right, which is not an insignificant amount of money. And because we're in the Caribbean, we do consider it our home market. We don't tend to look at just a snapshot in time to say, well, Jamaica is having its issues, right? Every country, Jamaica included, is going to have its ups and downs. What we say is that we're here for the long haul. We are committed to Jamaica. And we've done a very good job managing over these economic cycles. And I believe we have the capability to continue to do so.
How is the hotel acquisition going? The one in Boscobel.
Correct.
You have put in a lot of capital in that venture to refurbish it and so on. Tell us about the partnership with Sandals and how profitable has it been for you over this period?
Well, we have an excellent partner in Sandals, and we've been working with them now over the last 3 years to do a major refurbishment of our facility in Ocho Rios, Boscobel, which is branded under the Sandals Beaches brand. And to date now we've put in another $15 million US into that facility. And in working with Sandals to understand, how best to invest those funds, I can tell you we have a very first-class hotel up there that I would encourage all your listeners to go and check out and stay. We've done an excellent job over the last 3 years there. It really is a fine facility, and in partnership with Sandals, based on their marketing, based on the product we now have put into the marketplace, I can tell you that we've done very well up there. The occupancy levels are very good, and we're very satisfied with the return. As the owner of that hotel, we're very satisfied with the returns that we're earning there.
Now, back to Globe Insurance. What was the rationale behind the acquisition of Globe, and how do you expect this to impact on your bottom line overall?
Right. Well, it's very interesting. Our philosophy, given the size of Guardian across the Caribbean, is we want to have a dominant market share in all of our core markets. And as I've mentioned, Jamaica is definitely one of our core markets. And we had a situation where on the life side here, we're solidly number 2. And on the general side, which is a very fragmented marketplace, we were stuck around number 5 in the marketplace. And when Globe came on the market, we had an opportunity there to not only consolidate the marketplace, but also increase our market share, so that with the acquisition of Globe, Putting that together with West Indies Alliance, we now will have the largest market share in the commercial insurance side, about 40% of the commercial insurance side, and about 20% of the overall general insurance market share. So from a strategic standpoint, this made a lot of sense for us to grab a more dominant position in the marketplace. And the price that we paid for Globe will be accretive to the overall earnings of Guardian within its first full year of operation.
Okay. So do you see any opportunities to pick up more assets in that arena, the general insurance arena?
Well, you know, probably not immediately. I still believe that even with the acquisition of Globe, that the market is still too fragmented. And there may be opportunities down the road. Some of the other players that are perhaps number 4 or 5 in the marketplace that will have trouble competing against a Guardian, against the number 2 player in the marketplace. Given the low interest rate environment we're in and given the challenges in the marketplace, it makes it more and more difficult for those middle and smaller players to really survive. So I believe there's still consolidation opportunities out there, and as they come up, Guardian will certainly be looking for them.
Okay. Now, Guardian Holdings Limited, the group itself, had a pretty robust 9-month. In fact, your 9-month results show that 20% increase in profits. With the global trends towards possibly recession, do you think you can hold that growth? What strategies are in place to maintain that level of growth?
Yeah.
20% is phenomenal in any language.
Yeah, absolutely. Yeah. And we've done a great job of managing during this current economic cycle. You're absolutely right that you know, the various markets in which we operate in are challenged from a growth standpoint. And frankly, the biggest challenge to any insurance company, Guardian included, is the low interest rate environment, because as you know, insurance companies are great accumulators of assets, and they're long-term assets that we in turn invest and make a return on. And so the investments returns certainly have a lot of impact on our bottom line. So the current low interest rate environment certainly makes that a challenge to maintain that level of profitable growth. But having said all that, we still believe that there's good organic growth opportunities in our marketplace. You know, as I mentioned, here in Jamaica, our life business, we're number 2. But I still think there's opportunity to expand that marketplace. We're continuing to look for inorganic growth opportunities. We've talked about the acquisition of Globe. There's a couple other acquisitions that we have in the pipeline that we're currently looking at. So I think between the mixture of some of the organic growth opportunities we have in markets like Trinidad, in the Dutch Caribbean as well, in addition to some of these potential acquisitions we have in the pipeline, I'm quite confident our shareholders will be satisfied with the returns that we'll give them.
Now, the acquisitions, can you tell us in what categories those acquisitions may be?
Yeah.
And whether they'll be in the Eastern Caribbean or the Northern Caribbean.
Right.
We are looking at.
Right. Well, the ones that we are currently looking at would not be in the North and would not be in the East.
And not be in the East. So you're looking at Central America, South America?
That I would tell you would be more a medium to longer term view. I think we've talked in some of our past discussions that while we've gotten rid of some of our non-performing or underperforming assets outside the Caribbean, in a sense we've returned to the basics and returned to our roots in the Caribbean. Nonetheless, from a strategic standpoint, Central America, Latin America clearly is a high growth area. It has a burgeoning middle class. the amount of insurance penetration is relatively low, so it has all the right ingredients for us to get involved there and enjoy the growth that certainly is going to come. I think what we need to do there is identify the right country to be in, identify the right partner to partner with, and then make that acquisition. But as I mentioned early on in some of our other discussions, at first we want to concentrate on consolidating our home marketplace, Globe being the first acquisition, some of these other pipeline deals that I've mentioned. So we'll want to digest those in a sense, integrate those businesses, make sure they're solidly entrenched within the Guardian framework and governance, risk management, all the things that we do to ensure a good, steady, profitable earnings. Once we have that all buttoned down, I think then we begin looking to expand outside the Caribbean.
Now, you have pumped roughly $20 million into Martinique. How so? What's the rationale behind that?
Yeah. Well, it goes back to what I was saying before, is that insurance companies are great accumulators of assets. And as part of that, you need to invest those assets. Now, typically, and to the great extent, we invest in fixed income securities, mostly government securities, high quality corporate debt, and some equities. Overall, we have about 8% of our investment portfolio in equities. But to a great degree, we have them in fixed income, very typical of what insurance companies do, and they try and match those durations to your liability durations. Now, within an overall investment picture, though, we do set aside a certain amount of investable funds for real estate development. And again, because of the long-term nature of those things, it matches quite well with our risk appetite in terms of being patient capital, long-term investors. And in fact, real estate can throw off nice annuity-type returns for us over time through rental income and lease income. And so that's exactly what we're doing in Martinique. In Martinique, we're developing really a very unique, high-quality development there that consists of 3 buildings, an office tower, luxury condominiums, and a hotel. And 2 of the 3 buildings are close to completion, and the third, the hotel building, should be completed towards the end of 2013.
Well, I have 2 more questions for you, but one is a kind of curveball, if you will. The telecommunications business. Has Guardian Holdings ever thought of investing in telecoms in the region?
No.
Oh,
no.
How so? You're sticking to core business?
You took the words right out of my mouth. We stick really to core markets and core business. And, we've talked, frankly, at the board level about an overall strategy, and of course we look at those types of questions. Does it make sense to stick to our core? Does it make sense to branch out into other areas? And the answer that we always come back to is, let's stick to our knitting, let's stick to our core business.
Now, what sort of return on investment are you anticipating out of Jamaica?
Yeah. Well, Jamaica, again, long term, because we like to look at things over the economic cycles. Long term, we would expect to be about 12 to 15% return on our invested funds.
Now, finally, the Caribbean itself is a hurricane zone, and some areas of the Caribbean are on an earthquake fault line. So there's the risk of natural disasters. How do you factor this into the pricing of your products?
Well, first,
what's the impact on the pricing of your products?
Sure. Well, first, let me say that of course, our hearts go out to those that suffered under Hurricane Sandy here. Obviously, Jamaica took a direct hit from Sandy. A lot of people were affected directly and indirectly. So certainly our hearts go out. Secondly, it's in those types of occurrences where really a guardian shines, right? Because that's the end of the day, the service that we are delivering. But people are buying a peace of mind. And, again, my hat goes off to our people on the ground here that jumped in and did what they needed to do to get the people that insure with us back to some sort of financial balance. The way that we handle that situation is a couple ways. Number one, in order to protect our balance sheet, we buy reinsurance, and probably a lot of your viewers may not know what reinsurance is, but believe it or not, it's insurance for insurance companies, and it's a way for us to spread out the risks that we take to another insurance company. So we buy reinsurance to protect our balance sheet.
How does Lloyd's, for example, view the risk factors of the Caribbean measured against other areas?
Well, it's, as you mentioned, it's an active area. It's an active area for hurricanes. It's an active area for earthquakes, as we've seen, unfortunately, over the last couple of years. So clearly, the major reinsurers in the world, which are the big cat insurers, the Swiss reinsurance companies of the world, Munich Reinsurance, Lloyd's, as you mentioned, they look at it as a very active area, and so therefore, they price it accordingly. So to get back to your original question of how we deal with it, we basically need to take into account, the price that we get charged for buying that reinsurance, and ultimately, in a sense, that does get passed on in a certain way to our customers. So in effect, everybody, in a sense, buys or contributes somewhat to the price of living in a cat-prone area, and otherwise, you wouldn't get capital formation, you wouldn't get people to invest here. You obviously need to make a return. So it does get passed on, it gets spread across things, but if you didn't do it, obviously you'd be out of business pretty quickly.
Now, finally, what intelligence are you picking up in the reinsurance market in the wake of Sandy? Are we in for another increase in reinsurance rate, or are we likely to see another increase in reinsurance rates?
The reinsurance market is a very interesting market in the sense in that, believe it or not, there's so much capital that has been accumulated in the reinsurance marketplace that despite all these global catastrophes you've seen, they've still made quite a bit of money. And it's still a very competitive marketplace. So believe it or not, an event like a Sandy, which relatively speaking wasn't that big in the Caribbean, it was a much bigger event, of course,
in North America.
In North America.
Yeah.
But it wasn't big enough to really change the pricing structure of the reinsurance. I mean, you really need an event like a Hurricane Andrew or something of that magnitude before it really fundamentally changes the pricing structure of reinsurance. So this has been an event that really won't change the pricing much from reinsurance.
So on that note, we close this interview.
And thank you.
On to your next.
Very good to see you again. Thank you very much.
Very good to talk with you, and I always enjoy your levels of transparency.
Very good.
Thanks again,
you.
Jeff.
Great.